Hey everybody, hope you're doing well. Today we're going to cover the Nasdaq-100 for the week of February 15th, or essentially the QQQ ETF, or what we're just going to call the Qs from now on. If you like this content, please like and subscribe. This is also Prep to Grow's recommendations based upon our big data and AI platform called Grow. But again, if you like this content, please like and subscribe. Let's just jump on into it. What's the net night for this week? Flat to a very small bull. Last week we said it was going to be a bull. It was a good week. It was up 1.5% for those of us that like to do the options trades on the Qs or some of those companies that announced last week, like Cisco. Main reasoning is FANG Plus is accelerating. So if you look at the Nasdaq 100, the best way to think about it is the Qs. There's 16 companies that make up 65% of that group of companies that are the major movers and make up the 65% of the Q's holding. Those are the Amazons, the Boeings, the Facebooks, etc. of the world that fit into that, and they make or break what's going to happen in the Q's for the week. So the FANG pluses are accelerating their growth. The non-FANG seems to be slowing down a little bit. A more broader macroeconomic concern, but not so much for the Q's since FANGs just dominate that. The other reason is stock price is starting to exceed growth, and that's tied to number 4, which is they've grown 45% in the past 12 months and are at an all-time high, which is great. Qs have done really well since bouncing back from March, April. The reality is they're starting to outpace their growth. So do we look at leveling off or a slight pullback? Yeah. I think the Qs will pull back a little bit. Maybe not this week or next week, as there's a lot of earnings next week, but certainly in the next 2-3 weeks, there'll be some type of slowdown or pullback. But Qs, Nasdaq-100, those companies are still growing rapidly. The FANG pluses are dominating it. The non-FANG are a little bit slow. So let's just jump into what that growth rate looks like. Compared to last year, it's around 35%. Not quite 45% where the stock is at right now, which is the concern. Usually they're highly paired together. So that's why we're expecting a bit of a pullback. But the growth rate for the FANGs is phenomenal. Non-FANGs, not quite as good. Analysts think it's going to grow as well. We think it's going to grow very rapidly as well. So certainly good growth Q1 so far. No signs of a slowdown except for some of the non-FANGs that are more not a complete slowdown, but certainly a leveling off of the growth for the year or for Q1. And we'll get into that in a bit of a sec. So the companies that are announcing this week, there's 4 major ones. Applied Materials, I know we said they were going to announce last week. You never know with the earnings. They always change their dates, and we had one date, and it changed midweek after we released the video. So we're going to cover a little bit again today. Analog Devices, Marriott, Synopsys. The 2 we're going to cover is Applied Materials and Marriott, kind of the 2 ones. Analog Devices, Synopsys. Analog Devices, chip company, very old school. I like them. They should do well. Synopsys, kind of always hit and miss with them. But let's jump into Applied Materials and Marriott and cover some of those details. So as we jump into the Prep to Grow app, the best way to see, if you're a user, the best way to see our companies that are announcing is to go into the ETF, select the Q. We have other ETFs we track, SPY, XBI, XLI. We call it FANG specifically as an individual ETF. And we just see who's announcing in the next 3 weeks. And there's quite a bit of them that are announcing. Autodesk, Marriott, of course, Marvell. There's a bunch that are announcing over the next 3 weeks. So the main ones that got the main movement is Marvell. But for the sake of this discussion, we'll cover Marvell. I believe they're announcing next week. But for this week, we'll cover 2, which is the Marriott and Applied Materials. Let's cover Applied Materials first. They have some volatility at this option price. It's a put for June 18, 2021, about a 1.5 in terms of option to open interest ratio. So generally speaking, our particular algorithms are not a great picker of Applied Materials. We're about 60% long term, 55% short term. I would not buy a recommendation based off of this, our algorithms. So it doesn't fit our particular strategy. Folks that are doing momentum plays, swing trades, or option volume, it's probably a good one to play just because the option volume is so high, right? So 1,190 as I close on Friday to open interest 170. So a huge jump, huge option volume for this. Not normal. But Applied Materials is a Bay Area company. They essentially help put the word silicon in the Silicon Valley of the Bay Area. Been around since the beginning of it. One of the first ones within the valley. They're really the backbone of all chip manufacturing as a semiconductor capital equipment company. If Applied Materials announces a slowdown, then you should be concerned about the general market. They are a leading indicator for how the market's going to be. So if they announce a slowdown for their Q1, which is what they're announcing, their Q1, they closed out Q4 in October, I believe it was, so now announcing for Q1. If they announce a slowdown for Q1, then that's going to be a bigger impact to the market than just them announcing, especially since they only are 0.8% of the Qs. They're also part of the SPYs or the S&P 500. But the good news is they're ramping immensely in their Q1. I think the algorithms are picking up that it's not going to help their Q1 because most of this growth has happened after January. So this month they're really growing even more so. Some late growth in January, but not enough probably to help out their Q1. But I think their long term is going to be positive. So if you're planning for short-term volatility, you may want to do a put, but I think the data that we're seeing just in terms of growth, it looks good, but algorithms are predicting next 5 to 30 days it's going to be a pretty big pullback. But again, take this with a grain of salt. We're not too terribly accurate in predicting puts with Applied Materials. Much better predicting calls, about a 90 to 95% accuracy. But for today, or as of February 5th, we've predicted a put. Let's take a look at Marriott. I'm not a huge fan of Marriott. I'm actually a Hilton person. Hilton rewards are definitely a better way to go. Much better perks, better gym, all that kind of stuff. But they are part of the Qs, the SPYs, and the XLY. Not a lot of momentum on these guys for a put. And generally, I think we tracked about 15 options for Marriott that have some movement, and they're not enough to do any swing trading on. Marriott was negative for most of the year. They're currently experiencing very flat growth, which may be good since they're kind of managing their growth and hopefully not tying into losses. But as we all know, the sector's just been slammed. They're announcing their year end. You should expect losses and just a rough year that they've obviously experienced with the macro conditions. You should look at what they're going to say around the recovery. We think they're going to pull back. We have a pretty good accuracy with that. They're currently at 129. They went up a little bit last week. Obviously they have the potential to go up to 137, 144. But this is their moving averages, current 129. So they're above all their 5-day, 20-day, 200-day moving averages. And so that's certainly why, one of the reasons why the algorithms are projecting they're going to pull back. So I think Marriott's a good put opportunity. But let's jump into the rest of the Nasdaq-100 and the Qs and look at what's happening there. So if we look at for the year in terms of just growth, FANGs continue to grow, right? You can see here with our own growth projections as well overlaid on top of this. Rapid growth for the non-FANGs. They've always been pretty flat, not a lot of growth, but we have seen as we separate out our own projections between FANGs and non-FANGs, a bit of a slowdown. So we'll probably see that representative within the analyst ratings. But you should expect the non-FANGs are going to pull back a little bit. And as we go into earnings announcements, we'll talk more about that over the coming weeks, which ones slow down a bit and which ones accelerated. If we look at stock volume, pretty surprised about the FANG volume. low on average, I would expect way more volume, especially now and coming out of going into the beginning of the year and such growth rates. So surprised by the limited volume, but we'll see what that means, if anything. 30-day predicted stock price still continue the increase. We had a little bit of a down as we went into the beginning of the year. There were some blips happening, but it's certainly come out of that. It won't be at a huge high as it was at the beginning of the year, and I'm kind of feeling that as we go into the first half of February, but continuous growth. Non-FANGs, excuse me, not as much, right? A little bit of a pullback, pretty flat, but again, the Qs in the Nasdaq-100 completely dominated by the FANGs. So that's more important to watch. 30-day long option volume, more FANGs are looking at puts and non-FANGs looking at calls. We're seeing just the momentum and that kind of stuff go around, which is a little bit of an oddity, especially as we see non-FANGs pulling back. So how you read into that? I think maybe some of the market's misguided on what's going to happen over the next 30 days. We look at our long options as anywhere from 30 days to 9 months to 12 months. More people are putting puts on FANGs than not. There certainly is going to be a pullback. Stock price has outgrowth those predictions, so maybe that's the case, and people are looking at it from that angle. Non-FANGs, interesting that there's a lot more call volume on that. I don't think it's justified, or the data certainly does not show that it's justified with a small slowdown. 30-day predicted bear versus bull. We're seeing a little bit of the FANG momentum. Looking at short term, we see that there's be a pullback as well. Our data is showing that this is probably going to be a pullback as well. On the non-FANGs, with a slowdown, certainly we'll start to see the put option start to increase. But FANG pluses have really fueled the Qs. They're at an all-time high. They are exceeding their growth projections. The stock price is exceeding growth projections. So again, our 30-day prediction is that bear will come in and essentially pull the stock price a little bit. But that's not till 30 days out, we believe, at least 3 weeks to 4 weeks as we get through the earnings seasons and see how that flushes out. But stock price is higher than growth, which is the concern. So expect some form of pullback. That's what we have for the Qs in the Nasdaq-100. Again, if you like this content, please like or subscribe. If not, happy trading, and we'll talk to you next week.